All right, ladies and gentlemen, I hope you had a wonderful weekend. Last week was absolutely wild and a pretty awful start to September. This week we have the CPI, and although you would think it would be the most important, there is actually one set of data, and it's not the CPI. That will be the big one ahead of Powell here next week. So we thought that's what would have happened on Friday with the jobs report. If you guys didn't see it, there was a little bit of a reaction in the morning, and you got a Goldilocks number, but by the end of it, the NASDAQ and the S&P, it sold off a little bit more than expected, and people were not really feeling it, although the discussion over 25 or 50 basis points, that is still in the air. So this week, we will be getting inflation data, although people may not be as worried about it. I would be on the eyes out for that conversation surrounding 50 basis points, 2 rate cuts, or 1 at the next meeting. That's what everyone's going to be talking about. But then there is one more thing we need to go over that'll be bigger than all of it. So, Jad, I have all that for you. I have the keys. I have the breakdown. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/The Stack Market. We will see you there in the morning. And before we get into any of it, I need you guys to know today is Sunday, tomorrow is Monday. Here is the random account generator. Look it, we've been doing good every week, okay? I am going to take profits on the latest one. We did do good. Y'all been having good plays, so let's go. I don't want to jinx it, but let me get a good play, all right? Please, like a high quality blue chip play. Just keep it below $100. Post a random option trade, and tomorrow before the bell, we are going to do a random option picker or comment generator and pick a random play. So let's go, baby. We've been reviving it. Keep it up, but
working to the couch, it's the 2020 election. Live in the hills, but still get a spread. Started with a live, but still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Right off the bat, I'm not going to leave you guys hanging. The main thing you got to be watching for is obviously the CPI. That's going to be on Wednesday, so you don't have to wait too long. Tomorrow, we will be getting wholesale inventories. Then Tuesday, you're not really getting much. You're actually going to get the debate, which we're going to talk about. So there will be a little bit of a intermission event, and I'll probably be live for that debate too. But the thing is, the CPI is not the main event, and the thing you want to be looking out for, it's going to be the retail sales. I should have made this bigger, but Wall Street is already talking about this, and this is something we talked about a little bit last week. That's why we were saying the jobs report, because everybody has stopped caring about CPI. The trends over the last 9 months or so, even longer, everything with inflation, that has been good. People are not worried yet or right now, and I don't think they will be in the future about inflation reigniting. So the whole obsession over CPI data and moving the markets, it hasn't done that in a while. You've had bigger moves off of the ISM data last week than you've had at the CPI at this point. So we're not really expecting much, but now the retail sales, let's say nothing now in the next week or week and a half is really mind-blowing. If anything is going to move this debate or change the narrative around the rate cuts in September and how many they're going to do, it's going to be the retail sales. If those are active, if that shows a strong or weak consumer, both on the data or the revisions, you are more likely to get a Wall Street reaction or reaction on the bonds from this data than anything else. So CPI may just be more symbolic than anything, but retail sales is going to be the big one, but that comes right ahead of Powell. So all you're going to be dealing with this week, it will be a little bit of politics and then the CPI. So watch out for that. That is key number 1. Then coming into key number 2, this is the second event. Tuesday, you're getting the first debate with Donald Trump and Kamala Harris. As much as I want to say this wouldn't really move the market and have an effect, go look at the bonds from June 28th. Even go look at the market from June 28th when we had the last debate. You had a lot of movement. So if there is going to be anything in terms of odds of who's winning and what sort of policies they put out there, the best part is if Wednesday is the data event, you'll at least get something from Tuesday night leading into Wednesday that'll give you something to react to beyond just the CPI when everybody's just going to be waiting for Powell in the next week. So other than that, you will get a little bit of other data, but debate on Tuesday, CPI on Wednesday. These should be the main drivers of this week, and then retail sales and Jerome Powell, and then you'll find out if you got your first rate cut. So watch out for that. Those are your first two keys, and then finally is going to lead us here into a pretty picture and kind of the setup of what we're dealing with. Hopefully you realize it by now. What has happened, the yield curve has uninverted. The talk and getting ready for this rate cut in about a week, the market has already anticipated this, and the yield curve is uninverted. We have had an inverted yield curve for 2 years, and I've been talking to you guys about this for a while. We have even talked about this steepening of the yield curve. Well, I am not the only one who has brought this up, and now over the weekend, Bank of America brought this up as well, and they're saying how usually the yield curve steepening often does that as a recession begins. So we've been negative. This is zero. But the fact is now you've been steepening. We are about to go above zero. The last little recession there in 2020, you had a yield curve steepening. The other one was in 08 and then 01. And you could go back throughout history here. But the whole point is now, from now until Powell's rate cut, this will either be our first week of the yield curve being uninverted, or it's going to keep dancing around this like 0.000 or 0.01 negative or 0.03 positive until we get the rate cut. But by that point, you're going to be having the yield curve uninverted, your first rate cut, and then after Powell, the seasonality of September, that starts to get really ugly. So there's a lot of things there. What all of this means is, one, watch for the main event here, which will be Powell. There is short-term seasonality with Powell right after his event there, after September 18th. And then finally, this is a big shift with policy, even the bonds. If we go from now higher rates and raising rates and holding them high to lowering them, things are going to change. The yield curve is going to change. And now everybody's going to be asking, is the economy going to change? And are we going to get a hard landing or soft landing? This is what I was telling people on Friday. You got to really think about it. If the rates start coming down, that is a descent. So any sort of landing we're talking about, this descent now and how the economy reacts as we start to go lower, that is what's going to determine everything. So I hope you're ready for all of it. But Chad, we got a big week. I think next week will be even bigger, but even with how we moved last week, I don't think we're going to be disappointed. So I hope you're ready, but let us get into the plays. So right off the bat, I got a couple of different plays, and there's honestly a couple of different events. I have it all spaced out. I made a lot of different moves on Friday. We'll talk about some of those plays, but to start it off, I am beginning here with Apple. Not only is it still one of the biggest companies in the world, but there is an Apple event. I want to say it's on Tuesday, so it does coincide with all of the macroeconomic events, but everyone's going to be on the lookout for the new iPhone and any of these AI developments, and if it's going to give people a reason to upgrade, if this ends up being good, that could be a good reaction. It's kind of already sold off ahead of it. You could even go look at a lot of the big tech names. They have not done good so far, so this will be a big event as far as tech world is concerned. We'll watch out for that, but that is going to be play number one. Then play number two, this one, actually, I'll just give you play 2 and 3 here, because third one we got to talk about a little bit more. But on Friday, I made a play. I grabbed 100 shares of PLTR because they got added to the S&P 500. I don't know, what is it? That was supposed to say alongside Erie. That was just... So, yeah, S&P 500, PLTR, and DELL got added. So did ERIE. Etsy and AAPL got removed. There was also a bunch of other additions to, like, the small cap mid 400 and the mid cap 500 and all of that. So you might get some action on Monday, even after hours on Friday. PLTR and DELL, they had a big pop. So, if anything, if things start off slow, you're definitely going to get action on these names. And then finally, the yen. I did tell you guys a lot about this last week, and even if you saw that move, I'm still holding a future that we made. We were talking about that on the watch list. Hopefully, you got that little gem that we talked about on the live watch list. If you remember, I was telling you how holding those plays and what was going to happen. Well, after that watch list till Friday, you would have netted like $1,500. Yeah, so it was pretty wild, but what I want to include here on today's watch list is you have to understand moving forward, more bullishness on the yen, pretty much hard landing equals the yen. The way people are looking at the yen right now, it's already had a lot of upside bullish momentum. This is the most bullish it's been in a couple of years, and that will continue if the economy in the United States deteriorates, and the faster and harder the U.S. deteriorates, leading to more, faster, and a large amount of rate cuts, that is going to lead to a more bullish yen. The other problem is that people are waiting for the yen to fall back, and everybody wants to short the carry trade again. Well, this is what some people are saying. If you get a slow rate cut path and the U.S. doesn't go fast, and then the economy doesn't slow down big in the United States, you might see the yen kind of top out and then start to either chill here, or it's not going to appreciate and kind of find this range that it's been in the last 3 years. So I wanted to add that for those who've been holding the FXY and keeping some of those plays in mind. This is what I want you to realize. The yen is a hard landing play, or if there was a hard landing, I do think the yen would be one of those plays that would benefit majorly. So watch out for that. But those are the main plays. As far as everything else, I did flip the yen on Friday. We made a couple of different plays. Even after the data, I bought the dip. I sold the one in the AM that we had on the watch list. So I will be live on Tuesday watch list for the debate. We'll go over any of that. But besides that, I did make a GameStop debit spread. This was the only other play. I did the September 20th or the 13th, or the weeklies, but I grabbed the 40 call and sold the 45 for a price, I think it was like 12 cents or 14 cents a contract. And the idea was that Mr. Roaring Kitty had his tweet of pretty much kind of looked like he was selling out of Chewy, or that was the implication because of his meme, and then GameStop started going up. But like I've been saying here with volatility, anything related to the dailies, I'm going to want to flip them. So I had a lot of luck on Friday with a lot of different plays. We were even flipping the dailies, so I grabbed those debit spreads. Going to ride those out, but right when they go up, I'm going to sell them and make them free, because that's what we did on Friday with the SPY calls. We had 2 different sets of SPY dailies. Every single pop that we got on, literally, as the market was selling off, I would buy 10 or 15 dailies. They would bounce up. We sold out, and then the plays never came back up. So it was really risky. I got really lucky. I lost on them the day before, so definitely be careful. I haven't traded any of those in years, but what I did was take advantage of the volatility. We'll see if we get any of that this week. I'm not really expecting it. Otherwise, I'll be focusing on one of these plays here with GME. Otherwise, all about bonds and the yen, and then we get the data. Let that take us into the rates and everything else, and before you know it, the curve is uninverted and you're getting your first cut of the cycle. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember discipline. Oh, it never feels good in the moment. Everything, it's like working out. Even your account has to go through a workout, baby. It'll be sore, but it should grow. So, Chad, stay in the game. Have a good night rest. I will see you in the morning, and horn.